Since tomorrow we'll have the NFP, but so far, let's say, round up of the week, of the month, and actually we finally reached to the end of the second quarter, actually already enter the third quarter of the year. So the very first day of the July, the very first day of the whole quarter, which is expected to be, the expectations actually overall, not solely from the economic perspective, from the data perspective, but also from the market perspective, are quite high. We're expecting actually the economy to keep recovering slightly, depending, of course, with some downside pressure risks from the variants that we are facing from COVID. But overall, the forecast have been, especially for the global equity markets, on a positive side, on a more, it's on the upside, let's say. So today, actually, the reason why we are giving this webinar today is just the day before the NFP. This live streaming is a day before the NFP, and it actually is a very busy day. It has been a very busy day so far, and we still expect in just 6 minutes the jobless claims, along with, but later on also in an hour and a half, we will also see the release of ISM manufacturing PMIs from US, along with the Energy Information Administration data. So natural gas change, not really a key release, but yeah, this is what actually the releases that we have ahead of us. So let me just put, okay, I can save the very first comment. Welcome, Akap. Let me also, okay, the sound is it's brilliant, so all good. It seems that everything is all right. So, okay, just a quick briefing of what all happened so far today. We had a lot of releases already in the Asia session and in the European session. So we had actually the European inflation. We have seen Ms. Lagarde speaking. We have Mr. Bale. We had Mr. Bale as well. Manufacturing PMIs from the whole Eurozone and UK as well. So pretty much a mixed signals from the PMIs. This is generally PMI day. So, for example, we have seen the PMIs from UK actually missing expectations. They came below the forecast, and also they revised down to 63.9 in the final reading of June. That we could say that this is not really something that is not really something that we should worry about. We should worry, or the Bank of England should worry about, because it's still, even though it has revised lower, it's still above 50. There is also a series of highs so far in the manufacturing PMI for UK, and still the signal is a very strong growth in manufacturing sector. And market as well reported that supply chain stresses lead to record price increases. So despite this downwards revision, things haven't changed for UK from the manufacturing industry. At least there are still signs of a growth. So other than that, we have seen unemployment. We have seen the final reading for the inflation, for the unemployment rate, from the Eurozone. So it came at 7.9%, below the 8% expected. Dipped slightly lower, nothing really serious. Anyway, what is driving the sentiment so far today has been, other than the worries around the Delta variant, it's pretty much the anticipation of NFP tomorrow, along with the OPEC Plus meeting, which is actually today, and maybe already started. I'm not sure about it. I will have a look, but yeah, you're supposed to be in the European session, in the US session, sorry. So this is what is actually driving the market and what actually keeps the market a bit in a risk appetite. So what we have seen so far, let me share my screen with you. Hello, good evening, JK. So dollar analysis, yes, I'm on it. Yes, let's start with dollar and then we could go to gold as well. Don't worry, guys. So let me just share my screen. And let's start with the dollar. Actually, where is it by dollar? Let's share my screen as well. Here we are. Here we go. Dollar index. Okay. Don't have it over here apparently, but I could quickly drag it in. Don't worry about it. So dollar index. In general, what we have seen since the beginning of the day, it was so okay. Forex. Come on. Here it is. Excellent. Okay. We have seen actually. In general, we have seen dollar index initially since yesterday afternoon appreciated and spiking to 92.55 until the just an hour after the European Open, just over here should be. So then let me put with a mark the European Open over here so you can follow me. So yesterday's rally in the US session, sideways movement, consolidation in the Asia session, and another boost to the upside initially in the European session. In general, we have seen dollar actually finding some support and up actually printing this 3-month high. So this high that we've seen over here, at the very first 2 hours of the European session is the 3 months high, okay, and that appreciation is actually on the risk appetite ahead of what I already mentioned: OPEC plus, NFP tomorrow, the concerns about the variant, and so on and so forth. However, we have seen a quick reversal ahead of the US session and ahead of the data today. So it has slipped lower, below the 92.50, below today's high. So if I put just quickly the daily chart on, you can see that it's quite significant that it has managed to overdo this the previous high at 92.38. So it actually ticked higher, quickly turned back, but it sustains and move close to if I just try to draw a bit this area, this resistance area, because it's quite important. So despite the pullback, the so far pullback, it sustains a move at 3 months high. So as you can see, the dollar index overall, with this rebound and this rounding bottom over here, is sustaining a bullish outlook in the medium-term picture, so daily, weekly basis, while it has managed to recover nearly 70%, actually more than 70% of the declines that we have seen so far within the 2021. So let's get back to the intraday picture. I guess this is what you're mostly interested to find out. So let's put the come on. I have the 1 hour template with a white, but never mind. We could still preset that. That's fine. So it's my 1 hour chart is white, but what I would like you to emphasize on is the crossing that we get from the 5 and 9 exponential moving average. So the 5 has slipped below the 9, presenting some kind of a bearish cross, with the asset retesting the lower line of the Bollingers. Stochastic sharply to the downside, just got to 20, but further area to be covered. Covered as well. RSI below 50, even though has flattened a bit at 49. But yeah, this decline, the break of the two latest fractal have actually turned the intraday picture from negative to neutral. However, as I said, okay, the data are out, so this might change. So let's wait. Let's have a quick look what how the data came out. So as I can see, we have seen once again a miss on expectations for initial jobless claims. So 364,000 from the 393,000 expected. We have, however, revision higher for the last week. Continued jobless claims above expectations, with a revision to the upside from last week, actually from the week ending June 80th. And okay, a bit of a mixed release so far. So continued claims beat expectations, but the initial claims miss expectations to the downside. So as I can see over here in my newsfeed, this is the lowest since March 2020. So more than a year ago. This is the lowest data that we have seen for a year. So nearly on the pandemic money, on the month that the pandemic was, we had the sharp sell-off in the market due to the pandemic and the global lockdown and so on and so forth. So as we can see, the initial jobless claims have been rising over 4,000 2 weeks ago, but now we keep having we were having data below 400,000, sorry, and actually it's the fourth week, if I'm not mistaken, that is missing expectations. But we could say that is a positive reading, because it means that we don't have as much new application for claims as it was expected. So from that perspective, it's quite positive. But the continued jobless claims is negative. It gives some negative signals, because it actually means that people are keep applying for claims. So the ones that they have already claimed once. So yeah, decline on the newbies, but further rise on the people that already requested or applied for jobless claims. So a bit of a mix. We have, of course, more than an hour until the ISM. For the time being, let's stick to the 30 minutes chart to see the very, very short-term outlook for dollar index. So 4 consecutive sessions to the downside. Fast-moving averages keep pointing downwards. The asset hasn't reached oversold territory yet. You can see that it's within the Bollingers. It remains under pressure. RSI below 50, not a significant rebound or a sign to point to the upside yet, nothing. So stochastic below 20, not a bullish cross yet, not a break above 20 territory. So as the 30-minute chart is presenting, it seems that dollar is still under pressure for the very short time frame. So that was on dollar, guys. Let's move on. Whoa, what's this huge reply for Alicia? Okay, I don't know whether I could share that. This is a bit huge. No, it cannot be seen, unfortunately. Okay. The market appears increasingly unsettled by the Fed upward inflation, with a growing number of investors. Let me just put this close to my mouth. So, with a growing number of investors taking a net view that the central banks ambiguity mixing a new hawkish stance with dovish declaration from some officials, would ultimately translation into higher interest rates sooner than previously expected. Yes, this is what. Yes, you are actually. Good point, Alicia. So thank you for bringing that up. Something that I didn't explain is that why it's so important. Why we have. Seen all these like the anticipation where we have why tomorrow's NFP, I will say it in simple terms, why tomorrow's NFP is quite crucial. It's quite crucial because it will give us further hint on whether the, as is always the case, you know that the labor data is something that the Fed is really focused on and is the policy is depending on how the labor market is doing on the US. So tomorrow's NFP is quite important because it will give us a hint whether they will indeed need to proceed on a change on the current policy sooner than what was expected. However, this doesn't necessarily mean that it will be within the summer. For the time being, according to official comments and all the news that were comment speeches and everything that we have seen so far, any action will be taken after holidays, after the central bank's holidays, so after August. So this on the September meeting. So today's release will be important on how Fed will move or what actions they will take on September's meeting, on whether, as Alicia mentioned, whether they will they are like satisfied enough from the progress that they are getting from labor market, and they will finally proceed and exit this ultra accommodative policy and either hint or mention any kind of rate hikes in September. Okay, this is a lot to be read, I'm afraid, Alicia, but you have commented below Facebook, so our Facebook Live, so everyone that are in Facebook could be able to see your comment. You're absolutely right. So let's move on. We have seen dollar. Hello, everyone. Gold. Okay, and you mentioned gold. Oh, no, I shouldn't share that. You have shared with us your profits and stop loss, but yeah. I need to proceed and analyze the gold, and each one of you guys needs to, based on your strategy, on your system, on the time frame that you're trading, do your own risk management, position management, and identify good entry points, targets, and stop loss based on your own analysis. So let me check with gold. Okay, we have gold over here. Let's start with the intraday picture. Actually, gold appreciated so far today with dollar, with oil as well. And as I already mentioned, and if you were following us on our analysis page, this has to do on the risk aversion. Sorry. So we have seen a spike, rebound from the 1750 lows that we have seen this week up to 17 1780, if I'm not mistaken. Let me put the line on just to be sure. About 1779, so just 20 pips below the 1780 level. So it spiked higher. It's moving sideways the whole European and US session so far. However, as you can see, it sustains. Let me just put my trend line on. Actually, let's use a regression channel instead. It will be more useful, I believe. Let's see. Not this one. And let me have my standard regression and linear channel. So let's put some. This is the 1 hour chart, I remind you guys. So can you see that it satisfies a nice upwards regression channel to the upside? It has retested it twice so far today. I mean, this lower trend line, this immediate support, but it hasn't managed to break it yet. So it still sustains this kind of consolidation the last 10 hours in a row, sideways between 1772 and 1779 area. So for the time being, gold looks neutral, looks sideways, bouncing between this within this area. So if you're like trying to find immediate support and resistance levels, then you should use the relative highs and relative lows of the day. So 1779, 1772. So you can see, you can confirm this sideways movement in the very short time frame, also by the flattening of RSI and the flattening of MACD. So a break below 1772, which as you can see is a key support area for the day because it coincides the latest down fractal, the 20 period moving average, and the lower line of my regression channel. So a break below this area, it could open the doors further to the downside to a potential retest on the next lower fractal down to 1764. To the upside now, on the flip side, we have seen three retests so far today of the 1779 territory, but the asset failed to break that territory for 3 days in a row. So a break of it, could bring us the very next resistance area, the 200 period moving average that's seated around 1784 territory. So, however, let me just use my Fibonacci over here, and more precisely the Fibonacci expansion. Okay, so on today's consolidation. So immediate resistance areas, if today's high is broken to the upside, immediate resistance areas, as I already mentioned, it will be the 200 period moving average, which you can see is coinciding with the 161.8 Fibonacci expansion. So this is the very next resistance area intraday. So for the 30-minute chart, 1 hour chart intraday, guys, near-term picture, short-term analysis over here, it would be that one. Now, if we just zoom out and go to the higher time frame, this is the 4-hour chart. As you can see, next resistance area could be seen at the highs back in June. So 1785, 1790, and the last one will be this double top over here at 1794.60. So these are the next resistance areas. In the long term, in the medium term more precisely, gold, as you can see, let me get rid some of all these lines that we have. So as you can see in the medium term, so in the daily time frame, weekly time frame, the asset remains at nearly two months low territory. So after this sell-off that we have seen in June, it hasn't really managed to recover and is moving sideways at the low territory of the last actually nearly 3 months. So it's like similarly to the consolidation that we have seen back in the last 2 weeks of April. So you can understand that a break of this floor over here, this 3 months floor, suggests further pressure on this precious metal, even though even th- uh, and this is actually coinciding with what we are getting from the momentum indicators. RSI close to 30, unable to give any hint of a rebound yet at 37 week. MACD remains as actually still negatively configured, well below zero. So for the time being, overall outlook for gold remains sideways to negative. That was from gold. Yeah, you do like gold. I noticed the last few sessions, everyone is asking about gold. Thank you, Vivi. Um, uh, Thank you, guys. Thank you. I appreciate your feedback. It's giving me motivation. Thank you for that. So gold. Dan is also on gold. Okay. If there is anything else that you want to clarify with gold, be more precise. Okay. On your comments. What else you want me to cover on gold? We have seen 1 hour chart, we have seen daily chart, we could even see 30 minutes chart if you will if this is something that will help you. But as I already mentioned, the overall outlook for gold, the overall outlook for gold, I need to get rid of the rectangle. Rectangle, delete. Oh, okay, much better right now. The overall outlook remains is negative. The asset is at 3 months low territory, while intraday is consolidating since the Asia session with key support and resistance levels at 1772 and 1779. So this is the 30 minutes chart. You can see how narrow my Bollingers are, flattening. Fast MAs also flattening. RSI flatten as well. So consolidation is the word for intraday for 30 minutes chart. So of course the range market, if something is moving sideways, is not like is still like something that it could be tradable, but you need to keep an eye on any reversals of the upper line of the range and any rebound signs from the low territory of the range. Okay, euro dollar, yes, of course. Okay, euro dollar. Here we are. So yes, you can see it perfect. As you can see, euro dollar has seen a rebound the last 4 sessions in a row. So rebounded from the 118.33 territory up to 118.87. So that's nearly. Let me just measure it. So it's around nearly 50 pips rebound. As we're moving into the US session. So it managed to break this triple fractal over here and keep extending higher with the, let me just zoom in a bit, with parabolic SAR below the asset below the price, something that is considered as a bullish signal. RSI just crossed 50, but it's moving on the sideways on the right hand side, something that gives some consolidation signals. MACD, and you cannot see MACD. Let me put it twice so you be able to see MACD. So MACD is like getting lower to zero. So there is, what that means is that more bulls are entering the market. So there is an increasing positive bias. Okay. So what is driving in general the major crosses today is the dollar fundamentals, and the fact that they have been initially positive, even though the last 4 hours and ahead of the data, ahead of the US session, it has reversed yesterday's some of yesterday's losses here in the euro dollar. So for the time being, let's stick to what we see rather than what we are expecting for tomorrow. It reverted to the upside, so that is more than, it's nearly 61, actually reverted 61.8% of yesterday's losses. Okay, remember, this is a key resistance area, a key retracement level. This is actually in just 6 minutes. This candle will close, and it seems a bit like doji, like a bit like a doji candle. Doji candles present indecision. So even though MACD is presenting increasing positive bias, however, the asset might run out of steam. This rebound might run out of steam already. So how you will identify whether it ran out of steam or not, you need to keep an eye on how this candle will close in just 6 minutes, and whether the asset will revert lower, more precisely, will get back and close below the midpoint of this candle, of the previous session candle. So that should be a move and a closure below 118.70. Something that could trigger the attention to the downside, to the 20-period moving average, and then 118.50. 54 territory, 55 more precisely, which is the mid of the 20-period moving average. So let's check the 30-minute chart to see whether it's indeed run out of steam. Okay, indeed, the previous 30-minute session closed dodgily with a big tail, however, to the downside, to the upside. In the latest candle, it retested the 1870 that I mentioned, but it's boosting to the upside. So it might be a correction, it might be a signal for reversal. We need to be a bit patient and to keep an eye on the immediate support levels. So immediate support level, as I mentioned, is the 118.70 and a closure of the candle. Don't just wait to be retested. Remain hope for a confirmation. It needs to close the hour below that level in order to suggest that we might see a reversal. And the very next one will be the 118.65. If I put my my intraday setup and the 5 and 9 exponential moving average, you can see that they keep pointing upwards. So there is some positive bias still in the 30 minutes chart. It looks to be a bit, if I just shift to the 15 minutes chart, you can see that they have already flattened. So be a bit patient, guys. Wait for a confirmation. Okay, so that's why we are using moving average along with momentum indicators. You need to see the overall picture. Now, daily time frame. Let me get back to the black. I prefer, to be honest, the daily black. So daily picture, the asset remains still under pressure. Okay, it has printed, it has retested twice the 3 months low, similar to what we have seen in gold. So under pressure below all the moving average, 50, 20, 200, below all the moving average since the and it's actually extending, pretty much this is extending the decline that we have seen since the beginning of May. There is some kind of a rounding topping from over here, but not confirmed. In order to confirm a rounding top, which is a bearish pattern, we must see a daily closure below this support level, like completing this rounding top. So a move and a closure below 118.40 territory. So as I said, the outlook for euro dollar in the medium term is negative. MACD extending lower, negatively configured. RSI at 34, very close to the oversold territory, to the oversold barrier. In general, in the medium term picture, the dollar fundamentals have been positive, as I already mentioned, despite the worries about inflation and the worries about the Fed. The fact that we've seen Mr. Biden actually releasing infrastructure plans, even though they were below what the market was expecting, is something that it could provide some support to the dollar. Even though this needs approval still. And also, let's not forget that it's like we have the data tomorrow. So we need to wait for the data, to be honest, because a miss tomorrow is something that could support the euro dollar to the upside, while a good reading, a strong, solid reading, it could extend this decline that we've seen. Because anyway, the dollar fundamentals might be positive, but euro fundamentals are also positive. We keep seeing signs of economic recovery and ongoing strong data or positive data releases from manufacturing sector, even from service sector, which was the one that suffered the most, right? So euro fundamentals, we could say that they're also positive for the time being. So yeah, keep an eye on the 118.40 territory to the upside. It needs to reverse at least but it needs to get back at least back 119 in order to retest the 119.85 high. Was something that we have seen last week, but in the long-term picture, the outlook doesn't really change unless if the asset gets back to the 120 territory and to at least recovers half of more than a month's declines and losses that we have seen. It's around triple number psychological level, so it's a very important, the 120 level. Alicia, I cannot really share all the things that you're typing. They're huge. And but yeah, good analysis. Good job. Okay, dollar Swiss, of course, dollar Swiss. And here we are. So, okay, dollar Swiss. In Swiss and actually yen, where I'm not sure whether they were the losers of the day, the biggest losers of the day, or in general in the where they're the biggest losers or not, but they have been depreciated so far today. So Swiss and yen. So we have seen dollar Swiss to the upside. So at 0.9275, that is actually that shift actually managed to break the immediate resistance level that we have. Not immediate, which is actually is 3 months resistance, 3 months ceiling that we had at 0.9237. So for a second day in a row, it extended to the upside above this level. So the asset, it had been anyway to a rally to the upside since the beginning of June. So after this slight correction or sideways movement as a correction as seen in the mid of June, it managed to extend to the upside and to continue this upwards trajectory. So the outlook, we could say, for daily dollar Swiss is positive, with MACD rising, as you can see. Let me share it with you. RSI close to 70 barrier, overbought barrier, but is in an upwards trajectory. So as long as it remains above 50, and as long as it's keeping this upwards trajectory, it gives positive it signals positive momentum for the asset. So while something that has triggered my attention is this clash. Sorry, excuse me. Is this clash over here. So we have the 20-day moving average and the 50. They haven't really crossed yet. So we cannot really tell whether it's a bullish or a bearish signal, bearish cross, bullish or bearish cross, but it's something that we should keep an eye on, because a break of actually cross of the 20-day moving average above the 50, it could bring further confidence in regards to the positive outlook for dollar Swiss and a potential extension to the upside for the asset, because it has already recovered more than 50%, or already recovered actually 60% of the losses that we have seen in 2021. So yeah, bullish cross on the moving averages could strengthen the scenario to the upside for dollar Swiss, with the next levels, with our attention being triggered up to 0.9370 area and the top of 2021 at 194.70. So that's nearly 200 pips move. So that is in the long term. Intraday, however, as I said, it extended higher, but for the last 4 hours in a row, it declined slightly. However, it managed to sustain the floor that we have seen so far today. So it turned lower. Let me just put the intraday picture as well. The intraday. So here we are. So it looks like a hummingbird, to be honest. So the formation of the Bollingers, it looks like a hummingbird. So this tends to be a bear signal. So it has already broken, already moved below the two latest low fractals that we had in this 1 hour chart. We have a bearish cross 3 hours ago, so we're maybe a bit it was 3 hours ago, not currently. So a bearish cross of the fast moving average, but they keep pointing downwards. So RSI is at 44, keep slipping lower. So according to the indicators and the body of these candles, of the hourly candles, along with the fast moving average and the expansion to the downside of Bollingers, which looking like a hummingbird, as I said, the intraday picture remains negative for dollar Swiss, with next support level at, you can use either your Fibonacci's or you can use, I'm not sure whether I have my pivot points set up over here. No, I don't. But the latest fractals at 92.30 is our next support area, while, as I mentioned, Fibonacci could help us identify the next key support levels for the asset. So ATR is pointing to a 0.9 in the 1 hour chart. That's okay, while daily is at 55. Okay, that was on dollar Swiss, guys. Aussie, of course. So let's move on to Aussie. Aussie, actually, it was one of the biggest, Aussie dollar, more precisely, the cross. Initially, in the beginning of the day, as we entered the European session, was one of the biggest losers. So it dipped down to 0.7470. So that area we've seen in the morning is actually an area that is actually it's actually 8 months low level, 8 months low. So it's not the very first time that the asset retests that territory, that strong support level this year, but it has been in a downwards pressure since May, and once again you can see similar patterns. You can see these rounded tops once again. So this, more precisely, Tuesday's sell-off and the continuation of this sell-off so far today, even though it gives been some signs of appreciation the last few hours. However, we have another lower low. So these guys, this sell-off we've seen on Tuesday, the continuation further to the downside on Wednesday and so far today, suggests the potential resumption of this downwards move for Aussie dollar. However, of course, the 0.7460 territory, which is, as I said, 8 months support, remains key for the future of the asset in the medium term. Okay, so intraday, in the meantime, we've seen a rebound. However, this looks to run out of steam as the fast-moving averages are starting flattening. RSI already flattened close to 50. So this rally looks to run out of steam already. So this could be a reversal, could be confirmed if the asset turns down to 74.97, not 0.7497. USA 30, of course. Let's move on to stocks. And this should be somewhere here. USA 500. Okay, I will just drag it in, not wasting your time. So USA 30, here we are. Excellent. So okay, let's start with the daily chart, I believe. In general, guys, I think it's something that it's not something new, but in general, we have seen, not precisely from USA 30, but in general, the US indices and the global markets in general, the global equity markets are well supported so far, and it's expected to be to remain, to sustain this positive momentum in the third quarter as well. So this is actually in less than 2 weeks. I'm not sure when the earnings season starts. I think it's in two weeks time. So yeah, so 13th of July. So yeah, less than 2 weeks. So it's actually 2 weeks. It's 13th of July. Yeah. So we will have the earnings season. So what that's supposed to mean? The big companies listed in Nasdaq, in all over the world, in all the exchange markets, will release their earnings for the second quarter. So the expectations are that this earning season will be a strong one, similar to what the first quarter season was. So on the anticipation, on these expectations, the US indexes were well supported, along, of course, with some other factors that they have kept the US indices in general to the upside, like the bank's announcements about higher dividends. This is something that these are factors that they support the U.S. indices. So, more precisely, now let's move on to U.S. 30, since you asked for it, Ajani. So, we have seen actually since last week a nice rebound away from the 33,000 territory, breaking the 20-day moving average, and for 5 days in a row sustaining a move above the 20-day moving average, with the momentum slightly been increasing to the upside. So if I stick my MACD as well, for the time being, you can see that the asset has already recovered some of June's losses, and it's just the next, actually, a significant, or the only, if you prefer, resistance area is this triple top that we have seen, this triple fractal that we have seen in between end of May, beginning of June at 34,800. So this is a key resistance area for the asset. But as a whole, and then the US indices, I keep well supported, as I said, posting record highs. So the outlook is positive, except the US 30, which remains in a neutral zone in the long term between the 33,000 and the 34,800 territory. So it has rebounded. Next resistance is another 300 points higher. A potential, actually, if it struggles to break that level, then we might see another pullback for the asset. So neutral overall outlook for Dow Jones. Now, intraday, we had a nice rally, right? Nice rally since yesterday, actually massive rally since yesterday, topping at 34,660, turning slightly in the European session, supported in the meantime, and turning back above 20 periods moving average, and like settled at 34,580. So it remains. So in the 1 hour chart is actually neutral. You can see that there is a clash of the fast moving average. Is back to the area that was in the Asian session, stuck at the 34,580 territory. So in order intraday, for the short time frame, for intraday traders like the most of you, I think, we need another extension to the upside, and more precisely a closure at the top of the hour above the 34,600 territory. So in order to suggest a further appreciation or a potential retest of today's highs at 34,664. So let me just quickly see in the 30 minutes chart. Yes, it's consolidating up after this pullback. It get back to the mid of this area. So, and we are getting doji candles. So yeah, there is a lot of sideways movement. We need some we need decisive movements. So Euro Oz, okay, Euros, of course. Let me just check the news, guys. So nothing else, I think. Okay. Yeah, we have another 40 minutes until the manufacturing PMIs. I'm not seeing something on my newsfeed. The only thing that I'm seeing right now is that yen is the weakest currency so far today. Kiwi is the strongest, and that we have seen a spike in OPEC as we're getting close to the a spike in the oil as we move closer to the OPEC Plus meeting. So you mentioned Euro Oz and dollar yen, of course. Euro Oz. Euro Oz. Here we are. So, okay. So, okay, let's start with oops. Let's start with the 1 hour chart. So we have seen some corrections in the beginning of the day, and again like the last 2 hours. So the asset, as you can see, has found it has formed some kind of an upwards trajectory since yesterday. Bounced up to 158.58, turned slightly lower, sustained, however, within this channel, and actually finding an immediate floor, immediate support at 158.20. So the even though for the time being, the flattening of fast-moving average and the flattening of RSI implies to consolidation. However, we are seeing slowly some kind of a move higher for the MACD lines, signaling that slowly the bulls are trying to get the control of the asset. So, dear Sami, intraday remains, as you can see. Let me put the 30 minutes chart. I think it will be clear. You can see that the last 3 sessions, it's unable to either rebound or to either extend to the downside. These are quite these are doji candles, but what is key is that it found a nice floor at 158.20. So a break in the near term, like it might be in an hour, it might be the next few minutes, who knows. So a break, however, 158.20 could trigger the attention to the lower trend line of the regression channel at the round 58 level, or even 158.08, which is the regression channel, the lower trend line of the asset. Now, to the upside, in order to check whether it could appreciate again and even get back to the high of the day, key resistance area will be the this high over here, 158.35, or more precisely 158.37, based on the 50%, on the midpoint of this decline the last 1 to 3 hours. Okay, so that's the that is like the intraday setup. Okay, let me have a look on the daily chart as well. The daily chart, the asset sustains a nice floor at the 20-day moving average. 20 moving average, sorry, that's the 4-hour chart, my mistake. Actually, yeah, so the asset in the daily chart remains neutral, because for 2 months, actually nearly 2 months, is unable to exit this range, this area. Is consolidating between 56.50 and the 158.60. So unable to give us, to actually get a direction, a clear direction. Is moving sideways, bouncing from the 156.60 territory and reversing from the 158.70 territory. So bounce, reverse, bounce, reverse. So it's neutral, but if you find the midpoint of this range, any turn, any break of the midpoint could suggest a retest of the low level, or any break above the midpoint could suggest a retest of the upper line at 158.60. And you want also your dollar yen. Yen, as I said, is the weakest currency so far. It has been since this morning, to be honest. It's a safe haven asset. So during high uncertainty, we're seeing yen being affected, gold being affected, dollar being affected as well. So what we got over here? So we had a strong rebound with full body candles. Full body candles implies to strength from the bulls. So bulls have taken the control of the asset. So full body candles, and more precisely, what is significantly important is the fact that the asset has managed to break since yesterday, on yesterday's closure. He has managed to break the 111 territory. This is something that it didn't manage for actually since last year, since March last year. So it managed to close above 111 for the first time since March 2020, and more precisely, it managed to to move further to the upside, away from 111. So it seems that this upwards channel has been resumed and is extending. Okay, MACD positive, as you can see in this daily chart. The asset in an upwards channel, keep pointing upwards. RSI at 67, further area to be covered to the upside, further positive bias. So all our momentum indicators, even the parabolics, are implying to the continuation of this uptrend for the dollar yen after the 111 has been broken. This the 16 months resistance. So okay, we have news from OPEC. Okay, actually, because we asked about dollar yen, let's finish with the dollar yen first. So in the long term, next resistance area for the dollar yen is coming back to February 2020 highs, to 2020 highs in general. So 112 area, 112.50. So that was on dollar yen. Intraday, the asset rebounded a bit sideways as a correction because it reached overbought territory. It closed outside Bollinger's, so that suggests overextended asset. A bit of a correction. This is what it looks like for the time being, because we have seen an immediate support at 111.30 area. So consolidating right now because it was overbought. So it looks that this looks to be a correction since MACD still positively configured, RSI still positively configured, so yeah, the asset is above moving averages, so that implies to further strength or the control of the asset by bulls. So this rally doesn't look to run out of steam yet. Now, let's shift to oil, even though you didn't ask for it, but we had some news from OPEC Plus, as Stuart informed me just now. And where is my oil? Come on. And let's finish with it, guys, with oil. If you have any further questions, please stick them in the comments area right now, because it will be pretty much the last that we're gonna cover, yes, oil, because I think that you don't have any further questions. So yeah, what we're getting, so OPEC Plus. So actually I'm seeing that okay, let me just double check, guys. As Stuart mentions, OPEC Plus is adding an additional 2 million barrels per day starting of August, starting in August up to December. Okay, is that confirmed though? I'm not really sure. So let me check the news feed. So let's see. Let's see whether we have news from OPEC and whether this explains this boost for the continuation of the rally for oil. Okay, here we are. So Saudi Arabia and Russia have reached a tentative deal to gradually raise production. So according to Reuters, guys, the OPEC Plus group is weighing a plan that will ease production curbs enough to add 2 million, as Stuart wrote down over here, 2 million barrels per day to the market between August to December, with monthly increase being less than 50,000 barrels per day. So this is the final decision coming out of the OPEC meeting just now, just today. And this is something that could support oil higher. And anyway, as you can see, the oil has rocketed past the 75 level. So if I put the daily chart, you can see that just a few minutes ago, it has managed to break, or to retest, if you prefer, and to move above the 75 level, which is actually a resistance level, a high level that we have not seen since October 2018. Okay, it's a key resistance area, a multi-years resistance area. It's a resistance area that we haven't actually that the oil hasn't actually remain above it for 6-7 years now. So just now, just on the OPEC Plus announcement, the oil extended higher, $75 per barrel for the first time since October 2018. And as I can see over here, you can see that overall, this is the monthly, okay, this is a monthly chart, it won't help you, but this is a daily chart. You can see that the rally, it's been like since since the beginning of the year. But okay, the short term, in the last few months, the asset is keep extending higher and higher and higher. So this is a big daily appreciation. The last 2 months, we're seeing small slight appreciation, slight movements to the upside, but this is huge in comparison with what we've seen the last 2 months. So above at 75, actually already moved above 75 on the OPEC plus meeting. Well appreciated. This deal from Saudi and Russia and in general the OPEC plus allies is something that could keep supporting the oil. And actually the next area to be seen for oil is coming pretty much. I need to put the monthly chart in order to find the next resistance area, to be honest. So let me just put some Fibonacci on these ups and downs, on these fluctuations since 2015. So long-term resistance at 90 territory, and if we're trying to find immediate resistance level, then I need to shift down to the weekly chart. Okay, on the rally. Oh, come on. Okay, actually this doesn't help a lot, but let's put like Fibonacci's on the latest rebound to help us find immediate resistance levels. So that should be, come on. That should be at the round 80 level, and that 161 Fibonacci expansion at 85. So you can see that the long-term outlook for the asset, for the oil, remains strongly positive. You can see how massive these MACD lines are. RSI furthest into the upside, further area to be covered in a continuous rally since March 2020. So OPEC decision is just strengthening this positive momentum. Now intraday, okay, it's already for 1, 2, 3, 4, 5 sessions in a row outside Bollingers, closing outside Bollingers. However, the momentum is still positive. You can see MACD is way above zero. RSI does 70. So small corrections, small pullbacks looks like correction as long as the asset doesn't get below the 350 territory. So yeah, very positive outlook for the short term from the hour chart in for US oil and for the medium term picture. Okay. Yes, I will finish with gold since you want me to repeat gold, and I will call it a day, guys. Okay. So let's see once again, quickly, gold. And okay, nothing. So yeah, gold extending to the upside. 70s already did it test the 200 period moving average that I have, and the 1782 level. So we tested the 200 period moving average in this 1 hour chart, broken the latest fractal, so it exited this range market that we discussed earlier in this session. So we already broken and extended higher. MACD positively configured along with the RSI was pointing upwards and ready to break the 70 level. So both momentum indicators imply to bullish momentum and to support of this upwards move since yesterday for gold. So an overall positive bias in the near-term future, in the intraday chart for gold, as it has broken the latest up fractal and keep extending higher with Bollinger's expanding higher as well. Can you see that it started expanding higher? If I put the 5 and 9 exponential moving average over here, I'm sure that they were pointing higher. Yes, this is the case. They have resumed their upwards trajectory. So positive gold intraday. It's well supported by 20 period moving average. So next resistance level for gold stands at this tweeted top at 1785 level, 86 more precisely. So that was it from me, guys. I cannot. So I was a bit late. Can you please summarize gold, as it is possible to have a live session tomorrow at NFP? Yes, we will have a live session tomorrow at NFP. Stuart will be live 10 minutes before the NFP release, and you are gonna see together how it has impacted the market and where we are closing the weekly how the market are actually have been settled at the end of the week. I'm very glad to okay, so yeah, NFP live session tomorrow with Stuart, guys. So I need to call it a day. Thank you very much for attending today's live streaming. Hopefully we managed to help you. Have a great day ahead. Take care, and I'll see you again tomorrow. Bye bye.